Hello traders, Gary Wagner here. It is 12:30 in Honolulu, 5:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 15th day of November 2024, and this is the evening report for gold and silver, our weekend review. Speaking at the Federal Reserve Bank of Dallas yesterday, Powell offered an optimistic assessment of the U.S. economy, saying looking back, the U.S. economy has weathered a global pandemic and its aftermath and is now in a good place. However, he cautioned about the pace at which they will implement rate cuts, saying if the data lets us go a little slower, it seems to be the smart thing to do. He stressed that the Fed's approach to future rate cuts would be measured and deliberate, particularly given inflation's persistent nature and the need to monitor its trajectory. Today, both the dollar and gold had fractional declines, with the dollar declining by 0.12%, taking the index to 106.804. Concurrently, gold dropped by $3.20, finishing off the week at $2,657.40. On today's video report, we will continue our discussion as likely areas where we could see gold find support should it continue to trade lower next week. All last week, we have been discussing the fact that we absolutely have completed our primary or motive phase and have entered a corrective phase after gold traded to its record high just above $2,800. Our current assessment is that we have begun our correction with a strong A wave down, which we believe is still in play, although we have seen diminishing candle size in terms of the body through the latter part of the week. This is the daily chart. Yesterday, we noticed that the low came in below the first level that we find as a possible level of support. It is based on the series of tops that came in August at approximately 25.58. What is interesting is today's low precisely matches up with that price point, although gold did recover slightly to only close down $3.20. If gold does break through this particular price point, the logical place to look would be the 61.8% Fibonacci retracement. The data set that we are using, the 61.8% Fib retracement, occurs roughly at $2,523. What we are looking for at either of these price points, should gold find support, is what we label as a pivot, a key reversal, in which we go from bearish to bullish. That would occur first by diminishing body size in these red candles. We've seen that. And it would be followed by a pivot or a green candle with a higher high, higher low, and higher close early next week. I have converted our standard candlestick chart into a Heikin Ashi or a Japanese average chart. The key differential is how the open is fixed. In a candlestick chart, the open is the true opening price. In a Japanese average chart, like the one we are looking at, the open is fixed from the midpoint of the prior candle. This type of chart excels at showing us key reversal or pivot points, as well as the strength of the trend. Strength of trend is determined by two factors. The larger the body, the stronger the trend, as well as on a downtrend, the absence of upper wicks, and on an uptrend, the absence of lower wicks. The wicks are important because when there is no upper wick on a down or correcting market, it means that at no point during the trading session did prices go to or above the midpoint of the prior session. While we still have the absence of upper wicks, we do see diminishing size in terms of the candle box itself. If you look at different periods such as this ascent, you can see you had large green candles with no upper or lower wick. The pivot candle occurred on Friday the 27th of September when you had both upper and lower wicks. That was followed by a red candle indicating the pivot. The same is true for the final leg of the rally. The body size got very small and you had the first occurrence of a very small wick right before color change from red to green. We would want to see the same thing at gold, whether gold finds support at current pricing or trades as low as the 61.8% fib retracement at $2,523. We will monitor for the indication of a pivot or key reversal and act accordingly next week.
Action this week was very similar to gold's in that we continued lower, but the momentum to the downside has been dwindling. Also, we may have seen our low come in yesterday. If that does in fact become the low, is 29.81. Another technical indicator that tells us that we may have seen our low come in our Ichimoku cloud. Just as in gold, the pricing is within the cloud formation, and whenever pricing is within the clouds, it signals that a pivot may indeed be on the way. However, some other technical indicators are telling us that we may go lower still. The RSI, for instance, is still aiming downward and hasn't yet reached the oversold territory. The MACD, it is still firmly giving us a bearish signal. To get a clearer picture of what's going on in silver, let's take a step back into a weekly time frame. As you can see in silver, we have had 3 consecutive large red candles with fairly equal body sizes and no sign of diminishing. In Japanese candlesticks, this would be known as 3 black crows, the opposite to a 3 white soldiers pattern, which is a reliable pattern for projecting future price action. A 3 white soldiers pattern is a continuation pattern to the upside. The 3 black crows is one to the downside, and that also is signaling that we may indeed be headed lower.
This has been Gary Wagner
and Joseph Wagner,
wishing you as always good trading. We will talk to you next week for our next evening report on gold and silver. Bye-bye.